Welcome to a brand new show of Market Makers. Well, election volatility, is that behind us? Is it back to basics now? Is it time now to really get back into hardcore long-term value investing? If yes, in this kind of a market, where are the values? How next 5 years would be different from last 5 years? Is capex the new capex, which has been the evergreen, which has been the leadership theme? Will that continue? Or given that the complexities of the market are changing, a new leadership is likely to emerge. Let's take that point forward with Milind Karmarkar to talk about markets, value investing, and where is Trent headed? Lots to discuss. Lots to discuss. We've seen all shades of markets last week.
Yes, absolutely.
Euphoric high on Monday, panic low on Tuesday.
Correct.
Bout of short covering on Wednesday and Thursday, and a great follow-up on Friday. Yeah. Where are markets headed?
So actually, again, as always, I go back in history. So, in fact, 2002 to 2008, that period was one of the best periods to be in the markets because you saw the best, you saw the worst, you saw what happens after a coalition comes in power, you see what happens when a liberal party like Congress is supported by communists, the market goes down 20%, and after that, the market goes up 5 times. So, you have seen that happen. I think we are seeing a repeat of that. I'm not saying that the market will go up 5 times, but I'm seeing a repeat of that. So we are seeing, as you said, huge volatility, not the kind which we saw earlier, but still a huge volatility. And now we have a government which is a coalition government, all said and done. Though BJP has a significant number of seats, but it's a coalition government, and there will be coalition politics will come into play. So my belief is that whenever a coalition is in at the center, then you see a decent growth. The clear focus is economics. The clear focus is to do better for the masses, and that is what drives the markets. That is what drives the economy as well.
And if one looks at the history of last 20 years, I'm taking a leaf from your answer, markets have done rather well during the coalition period.
Absolutely.
Also. So this entire mindset which everyone has that the new government and new Abki Bar coalition Sarkar is not good for the market, that should be dismissed.
Very true. Absolutely. That should be dismissed completely.
So let's understand the market contours. The leadership in the market is very well defined. Capex, policy, railways, defense. Will that leadership continue?
So my view is that frankly, now the market is far better discovered than what it was in 2003-04. There are so many analysts, there are so many funds, and everyone is researching companies. So according to me, market is fairly discovered market. There may not be a single theme which will drive the market. The only mega trend which I see, and I have been talking about it earlier also, is consumption and rising per capita income. So whichever industries benefit out of that will continue to do well. Within that, of course, there is a shorter, smaller trends which are also there, like you said, whether it's railways, whether it's power. But again, there is a slight difference here. What will happen probably is that the PE expansion will not happen going forward. You will get the returns which earnings will give you. The P's may remain where they are.
You don't expect them to come down?
I don't see it immediately. Okay. 5 years down the line, I don't know. But immediately, at least, it's unlikely that the P's will contract. Especially in themes like railways, power and these, because there is a growth path, defined growth path there for next 4-5 years.
Okay. Last week we saw that there was a complete change of gear, reverse gear in terms of the stock outperformance, and fifth gear in terms of outperformance.
Yeah.
FMCG made a comeback, autos made a comeback. The general view is that a coalition government means you need to fix the rural economy. Yeah. You need to take care of the distress in the rural India, which means more money in the hand of consumer, and that anything which has got to do with more money in the hand of consumer, that theme made a comeback.
Correct.
Do you think there is merit in thinking like that?
So again, if you look at companies like, say, Hindustan Unilever, what one should realize is that it's a deeply penetrated market. You go to a small village, you will find a sachet of surf, a sachet of shampoo and so on and so forth. So I don't see a significant growth there, but yes, the sluggishness in the economy will go away, and because of that, they will be able to deliver 8 to 10% growth. So that is definitely there, but I think they are already priced for that. But typically, whenever there is volatility in the markets, much of the money, smart money as you call it, moves to these places, like whether it's FMCG or whether it's technology.
If somebody is buying these stocks at 70, 80p multiples, is that smart money? I don't think that is smart money.
No comments. No comments.
That is not smart money.
But yes, for the shorter period of time, people feel that there could be uncertainty, so they move to these stocks. Like technology did a good comeback last time, because again, technology is not dependent on Indian economy; it's more dependent outside. Again, if you ask me, how do you think the outside economy will do? I have no answer for that.
IT sector is growing in between 5 to 8%, depending on the company you look at.
True.
I think a double-digit growth is still a distance away. It's not going to happen in FY25 for sure.
True.
To FY26, we don't know.
Yeah.
So I just wonder what is so defensive and what is so smart about it when you're buying into a sector.
As I said, no comment. Nikunj.
You've not bought IT and FMCG.
No, I have not bought anything.
What did you buy on Tuesday's fall? Or what did you buy on Tuesday's fall?
So, I did buy whatever I had in the portfolio. I didn't go and buy something new.
Okay.
But I found a good opportunity when Larsen and Toubro fell. So we bought Larsen and Toubro. I found a good opportunity when Trent hit a lower circuit. So
Trent hit a lower circuit?
Yeah, it did for some time.
Okay.
And 10% down. So we bought where we had not been able to buy earlier because it was trading at slightly expensive valuations than what we thought, what we think in the shorter term. But we got this as an opportunity. So we sort of upped our weight in Trent in the newer portfolios. Older portfolios, there was no change.
You know, when there's a shakeout in the market, and this time the shakeout lasted for barely few hours. It did not last even for fairly few weeks.
Correct.
Normally shakeout, they last for a few quarters.
Yes.
Now because of technology awareness, lot of other factors, the shakeout lasted for few hours only.
Correct.
Or few days. The leadership historically changes when there is a shakeout. So do you think that the leadership in the market is unlikely to change or will change because of this Tuesday shakeout?
So let me put it this way, that as of now, if you ask me, apart from these railways or power or some of these, there is no leadership in the market as of now. The entire market has moved up. So whether there will be a new leadership kind of a thing, I really don't know. But at the same time, I have confidence that the market will grow for next 5 years. And because of that, again, as I said, that I still believe that the mega trend is growth in the Indian economy and growth in consumption or growth in per capita income. So anything to do well, what has probably not participated, it has participated like most of the other markets because of sentiments, is pharmaceuticals. They have not participated much. And I have, many times I have spoken about this, that affordability is the key factor for growth in Indian pharma, especially India-focused pharmaceutical companies. And if you believe that your per capita income is moving up from $2,500 to say $5,000 or $6,000, then pharmaceutical companies which have not actually participated in last 2-3 years could participate.
That's about it.
Yeah.
Okay. Let's look at PSUs in general, because everything which had a suffix PSU or a prefix PSU, that has moved up. Will markets now start differentiating there?
I think they should start differentiating. But because if there is earnings growth, then you look at the PE and then you decide whether to buy or not. But otherwise, anything to do with PSU going up, I think it was a sentiment driven rally, which in all probability will stop.
Where are excesses in this market?
PSUs.
There are excesses.
There are excesses in PSUs.
But you will keep railways and power aside?
I will keep railways and power aside, but if you see in the last 6 months, they have gone into a time correction. So we have not bought anything in railways and power for last 6 months.
Your last purchases were what, beginning of the year?
Yes.
Or
Yes,
that's the time you bought into new
beginning
ideas?
Of the year.
And you bought into capex and you bought into few railway stocks?
Yeah, correct.
Let's understand the entire capex theme. And I'm keeping railways defense aside.
Yeah.
There is a manufacturing renaissance in India. That's what they say.
Yeah.
So whether it is an area of AMS, whether it is an area of energy transition, or whether it is also in the area of EV transition. What do you like within manufacturing?
Within manufacturing, I think what we have bought into is predominantly power ancillaries. Rather than betting on power generation, we have bet on power ancillaries, and I think they will continue to. They have a long growth path. So they will continue to do well.
If one looks looks at power, there is utilities which have done rather well. And the general view is that India will consume more power.
Yeah.
Utilities are in a good spot now. They're no longer dependent only on state government wins and FAMCs in order to revive and survive.
Correct.
Do you think one should revisit power utilities?
So power utilities have already done well, and possibly they will continue to do well because there is growth in that sector. So there is many of these companies are putting in new power plants and things like that. So there is definitely growth in that sector. And because of that, that will continue to do well. But at the same time, I am very clear that PE expansions are not possible. So now you have to bet for what kind of growth they deliver. And then if you think that the PEs are correct, you invest.
What is the benchmark you look at when you're buying a stock in terms of the growth? What is your assumption? What kind of growth do you want when you're buying a stock?
So whenever I meet a company, my question to them is very simple, that you have a 7 to 8% GDP growth, you have a 4-5% inflation. So overall, there is a 12-13% growth inherent in the economy itself. So unless and until you are able to grow at anywhere between 25 to 50% higher than that, I will ultimately not be able to beat the market. So anything between 15 to 20% is the kind of growth which I would like to, and that growth should be there for a longer period of time, anywhere between 5 to 8 years. So when I look at that, then obviously it's very clear that the environment should be such that this is possible. And that is the reason why I ask the companies that whether they can grow at 15 to 20%. If the answer to that is no, I mean, it's possible. I mean, there may be a very good company, like if I go and ask Hindustan Lever whether you will grow at 15 to 20%, obviously they will say that it's not possible because they are deeply penetrated. So even if per capita income goes up, it is deeply penetrated. And that is the reason why I look at retail always, because long back, if you see in the US, most of these FMCG kind of companies were the market leaders, which then gave the baton to the retailing companies. And that is the reason why I think retailing will do better than these companies. But 15 to 20% growth has to be there, otherwise I'll not be able to outperform the market.
Okay. What is the P multiple you look at when you invest in these stocks? Let's say you identified a company. There are several companies in India which you can say, okay, 15 to 20%, 3-4 year growth is visible. But how much of that is in the price? How much of that is not in the price? What's the benchmark of P?
If the opportunity is such that they can grow at 20% year on year for next 15 years, then I will be willing to give a higher P. But if the opportunity, like especially in manufacturing, because we have seen that happen earlier also, 2003 to 8. The classic example, the P's went up to 60, 80 and then they collapsed. Some collapsed, some went into a time correction for a very long period. So if between 2008 and 2018, none of them delivered any growth. So it can happen that way, that they may go into a stagnation, or effectively they will continue to have their sales growth, they may continue to have their profit growth, but their stock price will not grow. So that can happen. So that is the reason why PE multiples can be different for the way the company is growing.
Fair point. Now let's look at one important ingredient, which is debt.
Sorry?
Debt.
Yeah.
How much debt levels are you comfortable with when you're investing in a company?
So frankly, if you ask me, most of the companies which we have, apart from probably Larsen and Toubro, they are all zero debt.
Okay. Is it a compulsion which you follow that you avoid companies with debt?
So it is not a compulsion. It is not a compulsion. But what happens is that if you have a very high ROC and very high ROE, then I will think of companies with a slightly larger debt. At the same time, as I told you, we also manage a Sharia fund where there is debt is a big no-no. So that is the reason why, and our thought process is also that when you are looking at a company, debt is all right. But unless and until it is comfortably below the ROC which the company generates, then you buy that company, otherwise you don't buy.
So by that yardstick, would a Zomato or a Paytm, or for that matter a Policy Bazaar, never make to your buying list?
So Zomato, as I said, that Zomato we had bought a few quarters back when they turned positive. So I told you that time also that unless until they turn cash positive, we will not buy it. So we did buy Zomato. We are holding on to it because they have a large cash portion and they can continue to probably grow. But we are keeping an eye because we think that even now it's still a metro-centric phenomenon. Whether it is able to penetrate in in the rural, forget about rural, but semi-urban areas also we have to see. We have bought it, but we are continuing to keep a watch.
Every 5-year regime, surprisingly, you track history much more than all of us, has always seen sets of outperformers and underperformers.
True.
Which is, for example, if you looked at Modi 1, the outperformance was not there with defensives.
Yeah.
It was there with IT and it was there with private banks.
Correct.
Modi 2, it was defense, railways, and perhaps PSUs in general made a comeback.
Yeah.
In Modi 3, where do you think the outperformance will come?
I think private banks and healthcare.
Back to basics.
Yeah.
Okay. Why, when you say private banks, why private banks?
I do believe that the per capita income will rise rapidly.
Okay.
And because of that, the demands of, as your income increases, your demands grow up much more than your income. So obviously you look at retail loans. I know that RBI is already cautioning most of these banks upon the credit deposit ratio, but I think over a period that will settle down.
Why have private banks underperformed? It's not that they are not growing. HDFC Bank is still growing. Their market share is still intact, but the markets are not very excited about the way our merger has moved.
So there the PE expansion has not happened.
Okay.
In fact, the PE contraction, our price to book contraction happened. Now I think they have reached a level from which their growth will be there. So I am still not sure whether the price to book expansion will happen, but at the same time they will deliver a very decent growth which will drive them.
Where do you think there is scope for PE expansion in this market?
Maybe smaller NBFCs, that's a possibility, which are driven by technology, which are in affordable housing and things. Their PE expansion is possible, but still the jury is still out.
If you're looking at IT, I'm going to shift sectors right now.
Yeah.
IT companies are not growing, but their balance sheets are strong.
Yeah.
They're doing a lot of buyback. They're still confident that AI is disruptive in the short term, but eventually long term AI is something which they also would adapt.
Yeah.
Do you think there is merit in buying this entire underperformance in IT right now?
So I don't go by pure value, because value with growth is what I look at. And as of now, I do believe that the growth factor in IT is still not coming. They will typically grow anywhere between 8 to 10% in best case scenario. But if that is true, then why will I leave out someone which can grow at 20%? So that is the reason why I'm not. We have IT, but we are underweight IT. That's the only thing.
The hallmark of last couple of years has been return of retail. NSE is saying that, NSE data on their website is that when markets fell on Tuesday, the retail buying was about 20,000 crores.
True.
It's a number which is hard to fathom, but it's a number which NSE is endorsing. What does this mean for the market when you have markets which are now dominated by retail investors?
So if I again go back significantly in history, in 1980s 401k plan came into effect in the United States, and it took about 4-5 years for that plan to stabilize. But after that, the kind of growth which the US markets showed was driven completely by this 401k plan, which basically brought in retail money into the US markets big time. I think we will see something similar to happen.
So what does that mean? Do you think...
Whether it's NPS, whether it's PPF, and whether it's mutual funds, all will continue to do very well in terms of inflows.
So 25,000 crore is par for course now?
I think so.
So what does that mean for market liquidity?
It's crazy. It's crazy. Let me put it that way. It will be crazy.
They say that when retail is there, smart money needs to be careful.
I agree. I agree. So that is the reason why, because nowadays I keep getting phone calls that, why don't you buy this? Why don't you buy this?
Your clients are calling you, rather than you tell your clients.
Yeah.
Then what do you tell them?
I say that I frankly don't understand this. But I'll hold on. I'll buy only when I think that the company will do. And these are typically all small companies. Some of them are large also. It's not that only small companies. But yes, so I think the way markets are changing now is that these small investors are not actually retail, they are HNI investors who probably come in a group and invest. And that is the reason why we see these big up moves in certain stocks. I'm sure they do their homework. But at the same time, since I buy for a long term, I have to meet the company, I have to understand their growth plans and then buy. So maybe shorter term, they may be doing very well. I don't deny that. But I will stay away from that.
Anything exciting in the IPO market which is there on your radar? You like the business, you don't like the valuations. Any interesting business which has gone public in last 6 months?
So we have looked at some of the businesses, but there are certain issues which we are trying to talk to the management as to how they will. But they are again typically in healthcare in the sense whether it's distribution, whether it's pharmacies. So we are looking at those type of businesses because we think that healthcare is a focus, as I told you, that going forward healthcare could do well. But there are certain issues there which we are trying to, understand and get them started. So
what is the best way to bet on digital India?
I think that what has happened is that if I look at overall in the last say 3-4 years, though a lot was expected out of Fintech, nothing actually came out. But I think over a period, one should keep a watch on these companies. They're still very small, but some of them should do very well. Of course, there are larger companies like Bajaj Finance. Again, as I said, that let me give a disclaimer that some of them we own, and this is not an advice. This is only a discussion which we are doing. So Bajaj Finance is one of the largest with good Fintech as a backup. So I think Fintech will survive and will do very well. But you have to identify these smaller companies which can become multi-baggers.
If the retail interest is so high, that means brokerages will do well, PMS schemes will do very well, SIPs means mutual fund AMCs will do well.
Yeah.
What are you betting on in terms of this rise of retail investor and the big beneficiaries of this rise of retail investor or stroke financial inclusion theme?
So we have always been invested in banking. We have not taken a bet on asset management companies, and I'll tell you the reason for that. They will do well over a longer period of time, but shorter period of time there is a possibility, I don't know whether it will happen, that their fees may contract. If that happens, there could be some stagnation. Maybe we'll look at it at that point in time, but right now we miss the getting it into it early, but as of now we don't want to buy it.
Okay, I'll come to immediate short term, and there are a lot of events. Markets always move from one event to the other event. Indian elections are over, US elections are coming.
Yeah.
Last budget is over, but the new full budget is coming.
True.
If there is a change in the tax structure, which is the structure for long term is change in this budget, are markets prepared for that, or that will have an impact like 2018 when the long term structure changed? It then started a long winter for mid and small cap stocks.
So there will be an impact if they change the capital gain structure, but I don't believe that will happen. For again, my belief is no value there.
But belief is a belief, view is a view.
But at the same time, this keeps coming on a regular basis. Every time a budget comes, that there will be a change. There are rumors that there will be change in taxation and so on and so forth. I don't think that will happen immediately.
Okay. What about US elections? That's like the mother of all the elections, which will have global implications on what US will do with China, what China will do with US, what kind of international trade supply chains would be done. From a market standpoint, or let me put it this way, from a global market standpoint, how crucial is that?
It is very crucial. There is no doubt about it. More crucial than US elections will be the Fed rate. US elections, again, either Biden or Trump, I don't think it will have a major impact on US-China relations. As it is, both of them have done what they have to do. And that will continue. It's like they can't completely avoid China also. At the same time, they can't give significant benefit to China. So that will remain as it is. But US Fed's interest rate decisions will have an impact in the shorter term, because again, if US reduces the interest rates, obviously Indian Reserve Bank of India will also reduce interest rates. But frankly, over a longer period of time, these are shorter period movements which can happen. But beyond that, I think the focus is on identifying good companies which have got a decent growth potential, and these are not going to be impacted by changes in the US elections or any change in the US Fed rate. I think they will, overall, these companies will continue to do well.
So irrespective of what the sequence of events next 6 to 12 months is, you are unlikely to change your portfolio in a meaningful manner.
No, definitely we are not changing our portfolio.
Okay.
Very clear.
Final question, when you look at the last 5 years, where do you think that you should have acted quickly and you say, okay, I knew this trend, but I was either reluctant or I was overconscious about pricing?
So I could have bought more when the market fell by, because that day many stocks went considerable.
So buy more of trend.
15% down.
Buy more of trend.
Not only trend, there were others also. So I could have bought more there, but frankly, that is where I thought that, again, sometimes looking too much into history does impact you. So I thought that this is just the beginning, it will fall further. That is the reason why I did not buy. I probably could have bought more.
They say that history is guide for past, but not a benchmark of future.
True.
So then why do you refer to history so much?
That is because the trends remain same. Because history, when I look at history, it's not that whether the same things will repeat. It's more of an understanding of human psychology. How a human behaves when there is panic in the market. Like I remember when the market hit a 20% lower circuit, I was on a holiday. And I remember calling from Copenhagen station and telling my guys to put out a buy reports on across the sector. So that is the thing. So it's more of human cycle, and that time there was a lot of resistance to that. So that is what happens. So that's all. It's more about human psychology rather than.
We're speaking to you when one big event risk is behind us.
Yeah.
How do you see markets moving in next 5 years? Do you think Sensex, which is at 75,000, could be anywhere north of 1,20,000, 1,30,000?
Double in 4-5 years. I've said that and I maintain that.
You maintain that?
Yeah.
So we are at what, 70,000, 72, 73,000?
Whatever it is, it will double from here. Let me be frank.
And where do you think there is scope for the market cap or that sector becoming, if the market is doubling, there are a lot of sectors and themes which could be 4 to 5x.
Yeah.
Where do you see that wealth or market cap explosion happening?
I think banking,
Okay.
and so the one will be banking, of course.
Okay.
Second will be that if retail continues to grow at 30-40%, retail also will give you a decent, but that's not a major size when it comes to the market. It's still a small size. So banking will be one, and probably the dark horse could be pharmaceuticals and healthcare.
Okay, banking and pharma. Really appreciate your time. Thank you so much for joining us.
Most welcome. Most welcome. Thank you.
That's it on this edition of Market Makers. Back to the studio.
If you like this video, then like, share and subscribe to ET Now.